Hey there, guys. Welcome to the Stocks with Josh show. Hey, the S&P 500 is hugging and kissing that descending line of resistance that I've been talking to you guys about for the last couple days. It is flirting and fraternizing with the line, but in my view, it's just been a big tease because there's been no follow through, no breakout, nothing more. On top of it, we have a classic doji candle. It's been forming on the day. I think it's going to close up with that doji candle. And I want to remind you guys the purpose that candles serve. It's one simple idea. It is a simple picture of the relationship between price and time. A doji candle looks like a plus sign because the body of the candle shows us the difference between the opening and the closing price of the stock or the crypto. And in the case of the doji, the opening and the closing price, they're exactly the same. That's what gives us the plus sign. This illustrates that the bulls and bears, they basically fought all day and neither one of them walked away the winner. The day ended a draw. And furthermore, when we get a doji candle at the top or the bottom of a move, it means that the move overall is losing its momentum. If it wasn't losing its momentum, then we would get a tall-bodied green candle. My last couple of videos have pointed out that for this bull run to be legitimized, that we needed to see just one indicator. We needed to see it kick in, and that's volume, volume, volume. That's what this move is lacking, in my opinion. So, does that mean that the market is for sure going to drop? Well, the problem with that is no, because there's really no reason for it to drop. We had great news when inflation came down to 6.5%. A lot of people could argue that the biggest reason for the markets to be falling is because the Fed is raising interest rates. And if the inflation is coming under control, well, he may not have to be as hawkish. But we won't know that till February 1st. So we remain in an environment in which we can be choppy. We could still move up. But I think the fact that it has low volume means that there's very low conviction to this move. But we won't know until the Fed either gives us that 25 basis point rate hike or that 50 basis point rate hike. I started January off saying that this month would be choppy, and it continues to be so. Guys, hit the like, say hi in the comments. This channel is about building a community of traders and investors. You guys can start that journey with me today by subscribing and hitting all notifications on the YouTube bell. Remember, anything I say is not a suggestion for you to buy, sell, or hold. And please watch out for the scammers in the chat. They use my picture, my name. They ask you to get a hold of them on WhatsApp, Telegram, and Instagram. That's not me. Those are scammers. Now, I'm only on the YouTube and Moomoo investment app, and I will never ask you to send me money. All right, a very interesting report from the Wall Street Journal came out today, and that's that global trade flows for the month of November have fallen again. This would be the 5th straight month that global trade flows have decreased. This is further confirmation of a slowing global economy as well as a coming deflation. Global deflation is like a fire extinguisher to the U.S. inflation. If the Fed did nothing else, many people could argue that global deflation alone would cool down our economy and tame inflation. So why is the Fed being so hawkish? Well, I've speculated on that. I think that he is working with the powers to be to create a unique environment where they can continue to print money. That's just purely my conspiracy theory on it, because it seems to me like deflation and recession are coming, and it should tame inflation in the US right now. Ultimately, we know that when inflation is fully under control and the Fed lowers interest rates, or when he begins to print money or do quantitative easing, we know that stocks are going to go up. And tomorrow is the PPI report. It's coming out for the month of December. It's coming out at 8:30 a.m. Eastern Standard Time. A quick reminder of what the PPI measures. It is the domestic products manufacturers, what they sell their goods for. So if they're increasing the prices of their goods, it means that demand is high. And if they're lowering their prices from month to month, it means that demand is softening or going down. So PPI can absolutely move the markets. It's an important signal. If it drops, it shows that inflation is coming down, which should make the Fed happy and hopefully allow him to be less hawkish. So let's keep an eye out for the PPI tomorrow. I'm going to cover some small cap plays in just a moment, but before I do, check out the offer from the Moomoo investment app. There is a link in the top pinned comment. Get up to 15 free stock for opening and funding an account. Take a screenshot of what you can get for each deposit level. I like Moomoo's free level 2 data, their stock screener. One of the small cap stocks that I'm going to cover today was picked up by the stock screener. These guys have a very competitive margin account rate, as well as great order type tools like the trailing stop to help you take profits and protect your capital. Plus, they've got the Stock Josh family chat group. I answer questions there every day. Click the link, get some free stock, and start your investing today. All right, I'm going to cover some small cap stocks, and then I'm going to give you guys some crypto analysis. About 2 weeks ago, in a lightning round coverage of stocks, I shouted out the ticker DCRT, company Direct Digital Holdings. It was a stock that I picked up through the Moomoo stock screener, and I told everybody to put it on their watch list. Shortly after that, I gave the entry price below $2.50. In the next 12 days, it had a strong run-up of around 90%. Now I've cashed mine out for a nice profit. Now, there is absolutely the chance that it could continue to go up from here, but I'm content with that gain. I was hoping for 100% profit, but after today's candle, I thought, you know what? This is good. It's had a really nice spike. Let me see if I can get it again on a pullback. So it's on my watch list. It is absolutely trending bullish. I will probably buy it again when it comes back and touches my ascending support line. This is the area where I would like to continue to buy a bounce. If we get a hit and a bounce off of it, that's my re-entry. I'm guessing that could be around the $2.60 to $2.80 range, but that is not the place where you automatically just jump in and buy. That's the place that I'm going to begin to watch it for the re-entry. I need to see how it reacts in that time frame. But right now the trade is done. And if you traded it with me, then let me know in the comment section how much money you made, what your plans are for it, or if you're going to hold it or if you're going to sell it, what are you going to do? This trade was very similar to the TCRT trade that we did a number of weeks ago. We started with that one at 90 cents and we sold it just under $4. That was a 400% gain. That was an incredible move. Then we waited for it to draw back to the 59-cent range and we decided to jump back in. Now I'm in TCRT right now, but I have a very tight stop loss at 65 cents. In my opinion, TCRT is also not an investment grade stock. It's a super risky stock. Now don't hold it beneath 60 cents. I'm telling you, you've been warned. It could drop to 30 cents, which would be a massive loss for you. Today, I gave a new small cap to my Moomoo chat group. It was a ticker WVE, Wave Life Sciences. These guys are a biotechnology company. They had some good news a couple weeks back, and I've done a couple trades on this. Now, right now, I'm in at $5.29. I've got a stop loss set at the low of the day, which was $5.18. And I believe it is very possible that it could break beneath that and kick me out. I want to make this clear. This is not an investment grade stock. This is for swing trading only. I'm not accumulating this. If we stay above the $5.29 range, I think we're likely to move up to the $7.80 range. If we lose the level that we're at right now, in my mind, the place where I will look to buy back in is $4.54. That's where it's got great support. Now, I'm very bullish on WVE, but I'm going to tell you guys that it's extremely important how you get in and out of these trades and the type of stop losses that you put in. If you don't even know how to use the stop loss, don't get into it. It's high risk. It's not an investment. It's a swing. Okay, let's talk crypto. Couple simple points. Bitcoin and Ethereum charts are still looking bullish to me today. I don't see them breaking down just yet. I had already sold my swing ETH early. I did it a bit early, but at the moment I'm watching very carefully for a re-entry because I think we could pop up even higher. But today I just want to talk to you guys about the coins that have had the biggest pump. Check out this article with me. FTT surges 48%. Other bankruptcy tokens also rise. The question is, how is FTT pumping? The company is defunct, bankrupt. The FTT token is worthless, yet these exchanges are allowing it to pump. It's shocking that it hasn't already been delisted. The article reads, bankrupt FTX's native token, FTT, is one of the best performing digital assets in the last 24 hours, surging by over 48% to $2.58. This is according to CryptoSlate's data. The embattled token has risen more than 170% in the last 7 days. This is its highest level since FTX filed for bankruptcy. With these gains, the token is 90% down from its all-time high of $84. My favorite quote is, there is not a single place in the world you will find stocks of businesses that committed fraud and went bankrupt pump several 100%. And you wonder why regulators hate crypto. So here's the point that I want to make to you guys. Crypto is pumping and some bad, worthless projects are soaring right now. And I don't want you guys to get it mixed up. It's time to cash out, run down the street with your own money like you stole it back from these fools. This is going to be a very short-lived opportunity, and it's a great moment for portfolio rotation. Move to best-in-class projects. And I've been asked a lot about the metaverse tokens, Mana and Sand. And unfortunately, I'm going to tell you that I don't like them. I used to love them. I made a ton of money on Mana, traded all the big pumps in the last bull run. When it began to fall, that was time to get out. And as I dove deeper into the projects, I became more and more aware that they significantly lacked users. These metaverse projects are very early and they don't have the large crowds of users. It's been hyped up, but there really isn't any money being made. You need to have millions of users a day in these metaverses, and they have under 1,000 or in the low thousands. That is something to be concerned about. So don't get too caught up in the metaverse story. We don't know who's going to win that space. Now, do I think those cryptos are absolutely dead? No, I don't think they're absolutely dead. And if you own some, you could keep it and see if it comes back. But I would be extremely cautious about loading up or buying more in these particular projects. These projects have pumped for one reason only, and it's that they were overshorted. Make sure that you're in good projects right now before the tide turns. In my view, it's a fabulous opportunity to rebalance. Don't waste it. Let me know in the comment section what cryptos you are buying and selling. This is going to be a short video. I'm going to be doing a crypto summit with Larry Jones and a couple of other heavy hitters possibly this week. I'll release more details about that in the chat. Last call to hit the like, show some heart in the comments, hit the subscribe and the notification bell. Don't trade alone. Peace and blessings, my friends. We'll see you tomorrow.